All right, so we spent a lot of the morning so far talking about how to get ready for an IPO, what's going to happen afterwards. Now we actually get to hear from the people that have been successful in the process and really hear the stories of what made their IPO successful, maybe some of the things they would do differently in hindsight, and really all the work that goes in there. And I'd like to thank these gentlemen for being here today, especially knowing that some of you, it's a very recent memory, so I'm sure very busy. Cam, Kyle, Michael, maybe just want to start with a little introduction of who you are and what your company does and about how recent your transaction was.
Sure, yeah. Can you all hear me? Yeah, okay. So I'm Cam Vermette. I'm a senior director on the legal team at Klaviyo. We are how do we describe ourselves these days? We're a database and marketing automation company. And so to give the 30-second pitch, we make it easy for our customers, which are primarily retail and e-commerce customers, to get their data into one place and then make use of it to power digital relationships. And that usually takes the form of emails, SMS, and push notifications. And so that's what we do. Been at Klaviyo for about 3.5 years, helping to build the legal team, and more recently helping to take us public, which was about a month ago, not even a month ago, September 2023.
And I'm Kyle Breidinstine, so I'm the VP of Finance at PepGen, Inc. We're a clinical stage biotechnology company focusing on 2 lead assets, one in Duchenne muscular dystrophy and another in myotonic dystrophy. We went public in May 2022, which provided us funding to get both of those assets into the clinic, and we're entering a phase 2 trial in our DMD asset and a phase 1 trial in our myotonic dystrophy asset.
I'm Mike Milligan. I'm the SVP Finance at Neumora Therapeutics, also a biotech in the neuropsychiatric and neurodegenerative spaces. We have 7 programs from preclinical to clinical currently, and we just went public last month.
Thank you, guys. So, going through the IPO process, we just talked about a lot of the metrics that people are thinking about. Can you guys talk a little bit about how your companies decided that an IPO was the next step versus, say, continuing to raise money privately?
Sure. Yeah, I can start. I wish I could steal the answer that was given during the last session, but for us, the company's been around a little over 10 years. It was an opportunity for employee liquidity. It was an opportunity to brand as a public company, but I think most importantly felt that we had built a durable company that was predictable, that was profitable, that was ready for the next step. And so the market allowed it, and so we went.
Yeah, and I guess, from the PepGen perspective, there was a lot of sort of thought put into this as to whether, in 2022, a private round would have been, a better scenario for us than an IPO. I think at that time, biotech, and probably still today, biotech valuations were under a lot of pressure. So a private round might have made more sense in some respects, but ultimately, we thought we could raise more money and essentially get to patients sooner and be able to fund some key inflection points in our clinical trials. So IPO route, even in one of the worst days in XBI history, was probably the best bet for us.
And we actually took over 2 years. So we started the process with the confidential back in 2021. Where we were lucky is that we had our seed investors allowed us to basically do a private round in the middle of the process because we didn't think the markets were productive to where we thought our valuation should be. And then we were able to actually go when we thought the markets had kind of recuperated enough to get us to the valuation that we were targeting.
And I think one question we talked about when we were prepping for this, but you guys can probably all say it in unison. Did any of you consider the 4-letter word SPAC in the process?
No.
And Michael just talked about that timeline of, I'm sure when you were first in that org meeting, that wasn't exactly the path and timeline you'd thought about. Kyle and Cam, what were your experiences with the initial timeline that you set out on the IPO journey, and how did that actually play out?
Yeah, so we had our org meeting in March and flipped public in August. So it was about a 5-month journey. I can take almost no credit for this. There's a guy at our company, I'm not going to say his name because I don't want him to get stolen, but a guy at our company who kind of quarterbacked the whole process, and we hit every single date on our calendar, which was great. That's not always the right thing for every company. Sometimes the markets don't cooperate. Sometimes strategic decisions are made. And so for us, it worked out that way. And so it was about a 5-month process from orging up until flipping public.
Kyle, how about yourself?
Yeah, and so from the PepGen perspective, overall, I think it was about 9 months from org meeting to IPO. And, you know, that's not sort of due to a lack of planning on our end or sort of missing any deadlines. Really, we were just focused on getting the preclinical proof of concept data that was needed as a key inflection point for our valuation. So, you know, we hit all the deadlines, and I think it took us about 9 months beginning to end.
Yeah, I think that's consistent with what we've seen in our portfolio in terms of trying to get the process to come together, but also the clinical results to come together, the financial milestones, and then that just market to cooperate, especially in this environment. It's been hard from a timing perspective.
Everyone's mic working? Anyone need a mic?
Yeah, middle two or not.
I think that, yeah, Kyle, you did really well.
Okay, let's try out that one.
Does this work? Yeah.
I think mine works now.
All right. So tell me about that org meeting. Who was there? Who was in the room? How did that process work? Michael, maybe you want to kick us off?
Sure. So, you know, from the company side, it's your senior execs because they're selling the story of the company. And then from the investment banker side, they're kind of pitching their skill set as well as the timelines. And then the lawyers are probably other big ones in the room.
Kyle, any surprises in your org meeting or things that you wish you knew going into it?
Yeah, honestly, I've been a part of a couple of these from the finance side, and it was pretty uneventful from our end. Really, I mean, the bankers and counsel sort of manage that process for us. Like, we were prepared. I think it's always good to be prepared for these meetings. So, you know, we were prepared with our financial model. We were prepared to talk about the audit and any technical accounting matters. But honestly, all that was covered in, you know, auditor and financial due diligence at a later date.
Maybe do you guys want to talk about for the group what type of materials were prepared and shared? How does that process of gathering all that information that's going to be discussed come together?
Yeah. So, I mean, you're basically, the way ours is structured, the bankers go first, right? They talk about the timeline, they talk about the deal, they talk about the process, and then the company steps up and tells their story. And so we, you know, our same story, executives, bankers, lawyers are all there. And we kind of just divvied it up among our executive team, and by function, everyone put together slides. And then we had a team that was kind of pulling everything together to make it coherent. But the only thing I would add from what these guys have said is that it's, I mean, this is a very attorney answer, but it's an opportunity to get started on diligence. And so you're telling the company story. Yes, you're talking about how you pitch and market the company, but you're also giving the bankers and the lawyers in the room a peek under the hood of what they can expect in the diligence process, and hopefully answering some questions for them so that you don't have to spend as much time on it down the road.
All right. Okay. You're through your IPO org meeting. Now you're starting to draft that S1. You know, how did that process go? You know, what were some of the things that maybe took longer than expected or just took a lot of resources on management side?
I mean, I can tell you for us, it was the business section. And it was just trying to get a cohesive message to center around, because we do operate in 2 different areas. We have assets at different stages of development. And to be honest with you, we tweaked it through the process. We kind of started giving the fact that we had 7 programs as our advantage. We quickly realized that our valuation as far as bankers and investors were concerned were way, way heavily weighted to our clinical assets versus our preclinical assets. So I think it's just, as you have those conversations with, especially with your bankers, and understanding where that value proposition and where it's coming from, to make sure you're really, really focused on the business section, bringing that value out to the reader.
Yeah, and I think being able to pivot is probably something that's important. I know as auditors, it's not a surprise to us when occasionally from draft 3 to draft 4, all of a sudden has a completely different story in it, and it's back to square one. So
yeah, if you looked at our business section from our initial one 2 years ago to the one that we filed with, you probably wouldn't even recognize it was the same company, to be honest with you.
Yeah, and I guess, I'd sort of, from the life sciences perspective, I'd echo that. The business, every section is going to come under a fair bit of scrutiny, including the financials and MD&A. But for us, the business section was under the most scrutiny, and kind of some, the way we handled it at PepGen is we were fortunate enough to have an SVP of strategy and ops who had a PhD and could sort of bridge the gap there between, the science and, getting it into, an S1, which was very beneficial from our end to have that person sort of running point. And being able to sort of bridge that gap, from our perspective.
Yeah, it's the business section. We tried to knock out a lot of the other sections early in the process, risk factors, some of the what's typically called the shell, some of the things that go, in front and in back of the business section to get those done and get them out of the way. But the business section is how you tell the story of the company. And so the bankers want their fingers very deep in it. The executives care a lot about it. And so a lot of time, a lot of drafting sessions spent, telling the company's story and figuring out how you want to position the company.
Yeah, and kind of with that, Cam, I think when we were chatting, you mentioned that there were a lot of other work streams beyond the S1 that took a lot of time. And maybe can you talk to kind of those? And we talk a lot about IPO readiness, and how did the prep work that Klaviyo put in, help in some of those other streams as well as the S1 drafting process? Yeah,
I like to think it paid off. I'll talk about a couple. One is diligence. This is a huge transaction. The bankers want to dig in, the lawyers want to dig in, they want to understand the company. And so as much work as you can do in as much time as you have leading up to the IPO process to get your policies in place, get your processes in place. We had the benefit of bringing some teams on maybe earlier than some companies do, like internal audit, to help us get SOX ready, things like that. That work was really helpful and helped us, I think, get through our diligence process a little easier. Another work stream that, took a little more time than we expected, I would say, is case studies. We had about 5 customer case studies in our S1. And so just, getting someone to sign a consent at the end of the process is easy, but getting the case study drafted, getting the story told in the way that, 1, is accurate, but 2, tells the story you want to tell, can take some time and some iterations. And so that was another process. And then in the last session, there was conversation about KPIs and what metrics do you want to use in your S1. And there's a bunch of numbers in your financials that your auditors are going to comfort and are going to do their diligence on. But there's other things that the company is going to have to basically put its name behind. And so, you might disclose numbers as a private company, but there might not be as much rigor in your back-end processes on how you're backing up those numbers. And so it takes a lot of time to just make sure that everything you're putting out there, you are very comfortable with and feel very comfortable with all of the work that's been done to get to those numbers. So those were some things for us that definitely took some time.
No, that's a great point, Cam. And I've seen some companies in going through the drafting process, realize that they've taken a fresh lens look at those metrics and said, maybe these aren't the best way to calculate them, and re-look at that process, because you need to be able to answer to the SEC of what is your methodology, is it consistent? Now, presumably all of your companies likely had audits previously. Maybe mention if they didn't. I know sometimes we're going through first-time audits straight to IPO. How did the financial reporting process change from what you maybe did as a private company in preparing for the IPO and the S1?
So we're about to do our first 10Q. So, it was a pain for my team doing the 2-year process. But one thing is we would update our financials in the S1 every quarter. So we already have an established relationship with our auditors. We're getting quarterly reviews. And so we already kind of have a process in place. From our perspective, from an accounting perspective, it's actually easier because we've been doing an S1 every quarter. And now we get to do a 10Q, which is much easier.
Yeah, I think that is some of the benefit of some of these longer timelines. You get into that cadence and it kind of becomes more normal. And so you've got a little bit of a benefit there.
Yeah, because as you can imagine, your executives and your bankers are pushing you to get it done fast. So you're already working on accelerated timelines during that S1 updates because they want to get on file, especially in the market that we were going out in when we wanted to be ready if we saw an opening that made our valuation get to where it was. So we've already been operating for a couple of years now on pretty tight quarterly deadlines.
Yeah, no, we've seen some over the past couple of years of we're not going to do a quarter, we're not going to update, we're not going to update. Can we update next week? So things have been changing probably for everyone. Kyle, how about you?
Yeah, I mean, I think I'd echo what Mike said. Really, making sure you're closing your quarters sort of timely and making sure your auditors are involved in that process, so they're reviewing it and it doesn't become, a fire drill at the end as you're trying to close it. So I think, getting your quarters closed and just having SEC ready financials is really key to making sure finance isn't acting as a roadblock in any sort of financing scenario.
Getting those financial statements SEC ready, I mean, adding segment footnotes, things like that, big pull for you guys, or how did that process go?
I can talk from the PepGen side. I mean, really, I think when we, engaged KPMG to audit us, we were under a scenario where we thought an IPO was becoming likely. So we sort of started out thinking that we were going to close quarters and have everything, SEC ready. And, we had good accounting advisors to sort of help us, along the way. And one of the things we talked about with them was just making sure that they were performing their audit under PCAOB standards, because I know there's different sort of levels of audit rigor there. So we didn't want to catch them by surprise and say, hey, you need to flip this audit opinion to a PCAOB opinion, but they haven't done the procedures necessary to, do that. So, that was sort of communications we were having with them, early on in the process to make sure they were prepared.
And I can't stress enough having those discussions early on, asking an auditor to make that flip. There's a lot that goes into it, including, switching from a private company to public company independence rules. So that can be something in the timeline that might not be being considered if the team isn't thinking of it. Now, how about interactions with the board, the audit committee throughout this process? How are they involved in the IPO?
Yeah, I can go first. So our board played a pretty big part. The bake-off, which is what comes before the org meeting, when the kind of dog and pony show where the bankers come and pitch to you about wanting to lead your IPO. Our board was at our bake-off. They helped participate in banker selection. And then from there, we had gotten into a cadence kind of long before the IPO of having quarterly board meetings. So we were giving them updates on a quarterly basis. We were bringing the bankers in to kind of do a market check on what's going on in the market. And then the frequency of kind of check-ins just started to ramp up once we flipped public and once we were getting ready to actually go. And so our bankers our board and audit committee were involved in the process pretty heavily, a lot early on. And then they kind of took a step back while we got through some of the more process-oriented things. And then when it became showtime, they were there ready to help us along.
Yeah, I mean, from PepGen side, we pretty much got an audit committee in place about 3 months before, and ultimately that was essentially our entire board was on the audit committee at that time. So we didn't have a ton of interaction directly with the audit committee. I think the first interaction was getting our 2021 audit opinion and financials approved for inclusion in the S1. But it wasn't a huge lift, I guess. We didn't have as robust of a process as we do now as a fully public company.
And for us, we're a little different in that we were started by Arch, and the intention always was they basically went out and acquired in stealth mode 5 companies, and that's how we built our assets. So the intention from the creation, as soon as we came out of stealth, was to prepare the company for an IPO. So we never kind of operated from an accounting perspective, at least as a private company, I would say.
All right. And we talked about it earlier in the session, but the SEC comment letter, how did that process go? What was the mixture of comments between financial statements versus the business section?
So I'll give my team some credit here. We actually, in 2 years, never had a comment on the financial section. On the business section, there is, I think, a natural pull, and Cam can probably speak to it better than I can, between the legal side of trying to hold back and especially your key executives trying to talk about how wonderful everything is. And so I would say the comments we got were more the use of certain words and positions and optimism. And so we pulled back some. And so that was the primary point of our comments.
I say those are the adjective comments. How do you support that your preclinical is a best in class? And
yes, exactly.
I'll leave sort of the legal stuff to Cam, but from the finance perspective, we had Overall, it went very well. Pretty benign comments. I think, we had a comment on our use of proceeds just to make sure it aligned with the business section, early on in the process. We had a comment, which I think is becoming pretty typical for folks to be getting about, disaggregation of your tabular disclosures in MD&A. That was quick and easy to resolve. And then, your standard cheap stock letter comment, which was resolved. So we had a very quick call with our SEC reviewers and were able to resolve them super quickly.
Yeah, I was actually checking this morning because I want to say it's 20 business days after your IPO when your comment letters typically show up on Edgar, and ours aren't there yet. But and I think we might be on like day 19, but they'll come soon. I would say let's call it 50-50 between kind of the more financial side and the more what I'll call legal / business. We had a lot of ones that were pretty easy to knock out, frankly. And there's, how are you explain how you define this, reorganize this, flip this around. There's a lot of focus on relationships we have with certain third parties, and so we had to answer some questions around that. But I would say roughly 50-50. And then luckily for us, once we got through the initial batch, which I don't think was like a record-breakingly low number of comments, but we were happy with it. It became a lot less. It was just a handful kind of each time we submitted after that.
Was there much dialogue with the SEC? Did you guys get on the phone with the SEC?
We did, yeah. That was primarily external counsel was dealing with that. So we would talk to them. We would kind of group up, divide and conquer between accounting, between legal, between other parties in the company, and then we would kind of prep and figure out how we wanted to respond, run it through external counsel, and they would typically call the SEC examiner and talk them through kind of what we were thinking, or just ask for clarification on things. Yeah.
And Kyle, this one's for you, for the others on the panel here, getting through those first Ks and Qs. Any advice?
Yeah, I mean, I think really, kind of the points we made is like make sure your quarters are closed because, if you're producing SEC financials, even if they're not going to make it into the S1, it's going to make it much, much easier. Make sure you're engaging, the printer ahead of time. I would get a system in place, right after IPO or right before it, so you're ready to do that in-house, and then you can essentially save some money on the printer costs. But really just get your close process going and start thinking about past year's financials and making sure you and your auditors feel very comfortable about them, and you can get your auditors to be able to say that they've reviewed these and do whatever procedures are necessary for them to sign off as well.
Again, I think as you look at that potential longer pathway to IPO in the current market, it gives you all that extra time for that IPO readiness to get ready for those sorts of systems and things in place. Now, if you were to do the IPO over again, are there things you would do differently?
It's all good learning. No, but I mean, one thing that was really important to us was to kind of have a quarterback, to have multiple quarterbacks of different work streams. There's just a lot to do, and one person can't possibly do it all. And so to come in early with pretty clear expectations on who is going to kind of oversee the whole process, and then to break up the work streams and say, okay, you're gonna handle this. I'm going to let you run with it. You're going to handle this. We, I think, did a pretty good job of that, and it helped our process, helped us hit our deadlines, helped our process go relatively smoothly. Is just, one person is kind of overseeing the whole thing, but they can't possibly have their hands in everything and have eyes on everything. And so they have to delegate to people they trust on certain work streams to just get things done, because there are a lot of big strategic decisions, but oh man, is there a lot of blocking and tackling along the way. And so having people who are ready to knock those things out was really helpful for us.
Yeah, I don't know if I'd say I'd do anything differently. I think, lesson learned, I guess, over having done this a number of times from either the assurance side when I was in public accounting or from the VP of finance lens, is really just controlling what you can control and making sure finance isn't sort of a roadblock in the way. So, the last thing you'd want is to have a financing window open up and you say you can't, you have to tell your management team, hey, we can't do this because our financials are stale and we're not ready to file. So there's a lot of things you can control in the process, like closing your quarters, making sure your ERP system is implemented, making sure you have, good financial statements, and making sure you're talking to the key sort of stakeholders that you can control, like, your auditors, your accounting consultants, et cetera. Doing that's and all the advanced planning is going to provide a lot of benefits to you down the line during the IPO process.
Yeah, maybe I'd add to that, Kyle, of, like you said, being upfront and everyone on the same page. I think things can change very quickly. So as long as everyone knows what the latest and greatest timeline is, I think facilitating that early to folks as things change, so that throughout that process, all those different stakeholders can advise you on, what are possible roadblocks to hit. Like you mentioned, staleness, that could be a, complex session on its own, depending on when you're talking comfort letters and timing. So really having those discussions up front to make sure you nail that timeline down.
Yeah, I'd make sure you have a text chain with your audit partner at all times, so they know exactly what you need from them.
No surprises.
The other thing I think we might have done differently, or probably would have done differently, is just internal communications, keeping in mind that a lot of your workforce are not finance folks, especially in biotech. We had a reverse stock split. So there was a kind of a take on when do you bring employees into the process, and we didn't want to get their hopes up because we were constantly pulling it, as I talked about, over 2 years. But what ended up happening is we got busy. We sent kind of an FAQ out on the reverse stock split and stuff, but we still had employees doing the math, right, on the IPO price against their options pre-reverse stock split. So we took what was a good thing and it actually turned out to be somewhat of a bad thing. So we had basically an 8-to-1 reverse. So these people had 8 times less money than when they did the simple math. And even though we put it out in an email, I think it's just important just to keep in mind that a lot of your employees aren't finance people.
Yeah, my perspective on that is no one's ever going to be happy at a reverse stock split. So try to message it as best you can, but don't take it personal when people are angry at you because you did a reverse stock split. So
it's probably no one in the room that thinks they're fairly paid, right? All right. Anything else we didn't cover? Parting words, lessons learned.
I would just throw in, don't forget 404. Especially even if you get the 404B pass, you don't get the 404A pass, and you only get your first one. So companies like ours that went in September, we only get a 10K pass. So we've already engaged Vanderboom to assist us in the process and get it up and running. So just don't let that trail off, because especially if you go near the end of the year, you're going to be really tight on getting your processes set up and enough testing to be able to do a clean 404A.
Yeah, that's what in kind of one of the earlier sessions I mentioned, essentially you're only a couple weeks away from needing to start that SOX compliance process for FY24, and it comes up quick. And I think everyone's focused on the timeline. I think especially in this window where things are constantly moving, doing that IPO readiness to think about, are we SOX ready? Are our processes documented? Can really help companies out because it comes quick and it's not a small undertaking.
Yeah, and I think I would look at, I would consider part of your process in your S1 process sort of systems implementations. If you're sort of on early stage systems like QuickBooks or a manual procure to pay system, like those are really what you're going to need. The IPO isn't the end game here. That's really just the start. So you really need to be thinking about that and getting buy-in from your management team that these are investments that are important to make early on rather than after IPO. I think that those type of things are going to make life much easier, once you go public.
Yeah, I mean, just to add to that, get your systems in place that are built for the long term. Get your equity system in place, procure to pay, all that, and automate as much as you can. And that's it'll help you along the line because there's just a lot of work to do through the process. And so the more that you can have kind of checked off on your list as you're going, the easier it's going to be to focus on the important stuff during the IPO process.
All right. Well, Michael, Kyle, Cam, I think you've got probably a lot of work to do over the next couple of weeks. So thank you for the time. We really appreciate it. And thanks for coming out today.